Jigar Mistry, co-founder Buoyant Capital, is now here with us on the show. Jigar, afternoon. Good to see you. So what's the big idea? How do you feel about the markets?
Hi, good afternoon. Thank you as always for calling me on your show. Big idea, I think, is two, three, fourth. I think the first part is that we are seeing a reasonably decent, quarterly performance in terms of results. If you strip out the OMC losses, in fact, we are sitting at a pretty good result across the board, large caps, better so in mid caps and in small caps as well. Our assessment of this, Rima, is essentially that you are, essentially creating an air pocket. So, if I take you back in time, uh, because such a large economic impulse moved away from capex to consumption, our assessment is 1.7% of GDP got transferred in the hands of people. And when you try and reorient the economy, it takes time for the economy to adjust and the listed space to show that. I think we are finally coming around to a place where the listed space is seeing the benefits of that. So we see, adjusted for oil, you are likely to see this continue. Second large thing we are tracking is that FMCG X cigarettes is essentially at almost a 3-year high in terms of profitability growth, almost tracking 17 to 20%. And lastly, I would say banking system growth is up 19%, and bond issuances is down 18%. So you're seeing a reasonably strong banking sector performance in the quarterly earnings season so far.
All right. Hi, Jigar. Good to see you on the show, Jigar. Couple of large issuances are coming about. Which one are you most excited about?
Hi, Nigel. Pleasure as always. Not, I think most of them are fairly priced. I don't think.
Most of them are fairly priced, is what you're saying, right?
Sorry, I just missed that. Can you repeat
Yeah.
that?
No, we lost you. You said most of them are fairly priced, and then you were making a point with regard to the upcoming issues, that is NSE. You have a Geo as well that's due.
Right. So, see, the space is very exciting, Nigel, because if you look at sort of 100 rupees saved from the household savings and you break it down to wherever, the amount can be invested, uh, the market segment, which is about 10 odd percent of household financial savings, attracts the most attention. But when you strip it down into what captures the largest value as an institution, I think the insurance plays are really up there, followed by the banking system, and followed by the markets. Now, the valuation of the markets is highest, but we would prefer to be shareholders in the insurance space, both life and non-life, the banking space, and if sort of you push comes to shove within the market space, I think annuity businesses are better placed than the transacting businesses. So that way, we are not really all that keen at the moment.
Okay. All right. But insurance is the theme I think that you have been bullish on, right?
Yes, yes, Nigel.
If I'm not mistaken, I think Max Financial was something that you'll had.
Yes, held I think since 2018, if I'm not mistaken.
So that's a multi bagger for you all.
Right. So, see, the life insurance one is the underpenetration theme playing out, but also from the standpoint of the institutions retaining the largest part of the wallet, I think they're really up there. Plus, as they trade at about 2.5 of the price to embedded value, which is comparable to most banking systems, although obviously the businesses are not comparable. So with a multi-year story playing out, you essentially have a reasonably good space in life insurance as well.
Okay. And you've got cash of around 9 to 10%, right?
Yes, that's what the fact sheet says, Nigel, for us. But we don't run a model portfolio, and if the flow is reasonably high, then the newer accounts take time to deploy. So as a philosophy, we are saying about 5 to 6% on median accounts as cash. The higher number is largely because the money flowing in is awaiting deployment.
Okay, what about HEG? I think you've had a look at that one, right? It's a special situation playing out. Interested or not?
Sorry, I, I don't really know that.
HEG, graphite electrodes?
No, no, Nigel, we don't have that. Sorry.
Okay, let's talk about the old darling then, steel. Steel prices have come off. I'm not sure the kind of allocation you'll have, but at one point of time, you used to be totally on the money with regard to that, at your sell side days more than 10 years ago. How are you reading the setup right now? Some believe that longs are more favorably priced in comparison to the flats because they saw great amount of pain. Prices came down drastically. The spread between longs as well as flats was gone to extreme levels. So would you look to play the ferrous space, or do you think the non-ferrous, the aluminium plays actually? They're not doing much because aluminium prices that were dancing at around $3,700, $3,800 came down to around $3,000, $3,100. Do you like that space?
Right, Nigel. So I think, see, any commodity is to an extent a dollar debasement trade, right? Now, you would want to play this via, if that is the entire play you are aiming towards, then you want to play it via something that is listed on the exchanges because that then attracts a reasonably large derivatives positioning as well. So, non-ferrous over ferrous is generally the belief system. Ferrous within India tends to be locally bound, especially the long cells. We have been discussing several times in the past. And I think, therefore, you need to track the local demand supply a lot more rather than debasement play. Our play around metals was the fact that eventually, over longer periods of time, you would see dollar weaken against the larger currency systems. And therefore, commodities did make sense. So our play is in the non-ferrous space and not really the steel space.
One quick word on the latest, the larger investment that was reported in the block trades, which was Genius Power. What a beauty of a move for y'all. I think y'all got a large chunk at $290. Today it's at 335 rupees the last time I checked. I think what the street is a little skittish on is the working capital days, and the cash conversion as well has been a little bit poor. But otherwise, the order book is solid, execution seems to be good, and Genius Power has a good amount of the market share as well. Tell us what is the key to track from here on with regard to this company, and why are you all bullish?
Right, Nigel. But see, you are right on the block trade getting reported. The reason why we were excited is the fact that about 2 to 3 crores of new smart meter orders are still to be received. Part A. Part B is the fact that the nature of the revenue line for this company will change as well, right? So you are likely to go a lot more into OEMs, which has the better margin profile, and therefore the overall margins will likely improve. The sort of dark horse here would be if the orders from a few states start flowing in Telangana, especially. So Telangana, Karnataka, if those orders start flowing in, then the replenishment of the order book should be fairly good as well. And the working capital, I think you are right, that was pending, the acquired business. But once that starts getting resolved, you are essentially looking at, a business which is more than fairly priced, which is growing and reasonably interesting from that standpoint. However, it's not sort of as part of as far as allocations go. It's a fairly small allocation for us, but it is an interesting space, as you also mentioned.
Okay, thank you very much for that, Jigar.